We are back, and we are ready for these bells. Mark, we wanted to just zip through with everybody before we open to give people a sense of the, actually, we're going to go now.
Ready. I don't have any list. I don't know who these people are. You don't have a list?
No,
either.
I do not.
We don't have the list.
Everyone.
We apologize. We do not know who is ringing the opening bell or...
Bio-Rad, it looks like, is ringing the opening bell.
Rad, dude. But we are underway, and I do mean underway.
We're getting trades on the board. We're down 50, but we should emphasize to everyone, it takes on a normal day quite a while to get an open. We didn't have the futures trading this morning, so we're down 101. Futures market, interestingly, Mark, look at the huge gap between Chicago and New York.
The NASDAQ opens everything. They are down 110 points on the NASDAQ.
Yeah.
So that opens everything simultaneously. So that was the extent of the futures decline.
Yes.
And a little bit more.
What's interesting when you look at, we talk about what's been going on here, and everyone wants to say, how do you have these moves and these seemingly so vicarious or unpredictable? The reality of it is you've got live people here. What they're trying to do is find the absolute best price. So they take longer to open up each individual stock. Hypothetically, that could give you a little bit less horrific of an open than you might get if you just were going to go ahead and take the electronic trade as indicated in futures and open there.
All right, so really what we're doing is we're waiting for them to open a lot of stocks.
Yes.
But again, I will explain, the NASDAQ, which is a completely electronic exchange,
yes,
they open everything at the same time. And so that's a quote-unquote honest price from them right at the open. We opened down 101. We are still down 97, 98. So this is clearly a dramatically lower open for stocks.
It is incredible because we're sitting here watching and waiting and watching and waiting. But people are working to get these names open. So let's check in with Mary Thompson. Mary, at 223 and counting right now.
That's right, 223. That doesn't really tell the whole story again because so many stocks have yet to open. Just to give you an indication or as to how some Dow components are trading this morning, we have GE, of course, the parent company of CNBC, trading down $1.30 right now at $17.50 a share. Of course, this lower open expected, and we are expected to go lower right now off the 252-point decline that we have. Of course, coming into it, we had a global sell-off. We had Japanese stocks down 9%, the Hong Kong markets down 8%, Singapore was down 8%, and of course the sell-offs that we are seeing in Europe today, most of those markets down about 8 or 9% as well. The concerns continue to be the deleveraging that we are seeing around the world by hedge funds and other investors, the recessionary fears that were brought to the fore today by the fact that the UK, its economy contracted for the first time in 16 years in the third quarter. Add to that the news that we're getting out of not only corporate of America, but corporations around the world. Toyota, poor sales in the U.S., basically causing it to cut its forecast for the full year. Sony also under pressure. Both of these, of course, Japanese companies, and of course the numbers or the warnings that we've been getting out of a number of U.S. companies as well today. Couple of points to watch today. 839.80 on the S&P 500. That was October 10th intraday low. A number of traders watching that. And just an indication on National City being acquired by PNC, down 88 cents at $1.86. The Dow Jones Industrial Average off 384 points. Now let's get a check on the NASDAQ with Scott Wapner. Scott?
All right, Mary, thanks so much. And just a note on those circuit breakers, just want to point out here that the NASDAQ does use the same circuit breaker as the NYSE in case there was any question regarding that. NASDAQ, as we said, fully open, down 6%. That is a loss of 100 points. So let me also point out that the Friars Club did the open this morning. I don't know if it's a good morning for a laugh or not. Perhaps we all are going to need one after the day today. But let's take a look at the big cap technology stocks here. Microsoft certainly set up for a down day after that disappointing outlook, talking about a slow economy and the impact there, slow spending, PC unit growth slower than expected, et cetera, et cetera. You get the picture there. eBay is down 6.5%. And really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%, Research in Motion 10%. I'd like to go through these in case some of you are actually listening on the radio right now, so you get a feel of really where the kind of selling we're hearing about now. Google 7%, Intel is weak. I've been looking at the Philadelphia Semiconductor Index for weeks now because it's dictated the trading here. We're down 6.5% on the stocks right now. Let's go down to the NYMEX.
Oil down more than $4. Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day, but it wasn't enough to stem the slide. The slide is due today to what we're seeing in the global equities markets, and that's what these traders are focused on. They're looking at the slide in stocks around the globe, and oil is falling as well. But I must note that since the Dow has opened, we are not on the lows of the session. Oil had actually fallen below $63 a barrel. We are off of those lows, but still down $4.40 here at the NYMEX. A lot of folks in the developed countries are saying that OPEC cut should never have happened. The International Energy Agency is saying that it's going to do more harm than good to the world economies. Rick Santelli, over to you in Chicago.
Well, thank you, Sharon. You know, a lot of traders down here are actually amazed and impressed that the markets didn't do actually worse. The spiders were fairly accurate in where they priced pre-opening. If you look at what the lows in the S&Ps are, which right now we're still 10 points above, but everything's happening fast. Interest rates right on the opening at the lowest prices for equities actually saw their yields move up a bit and their price move down, which also makes sense because many people this morning, due to the uncertainty of equities, the wide bid-offer spreads, the lack of big places to trade with big volume, well, they hunkered down in there. Now some of those buys are moving and doing what they need to do in equities, pulling those out. But let's be clear, things like a 30-year bond, which had some very strange anomalies yesterday in the 30-year swaps, was a prescient indicator. 30-year yields, for many reasons, are now at the lowest level, or were at the lowest level they've ever been at. Mark Haynes, back to you.
All right, thank you very much, Rick Santelli. We have all 30 Dow stocks open. The Dow is down 436 points. I don't know whether all 500 of the S&P stocks are open. It is down 47 3/4. The futures are pretty much, after a big dip, down to minus 68 or so. They are back to more or less minus 60. It's an extremely volatile situation. NASDAQ Composite has come off its lows down 86.5. So, what are the pros doing? Should we care? Joining us, Wendell Perkins, Chief Investment Officer with Optique Capital Management in Boston. Fritz Meyer, Senior Markets Strategist with Invesco AIM. Wendell, we'll start with you.
Yes, good morning.
Buying opportunity.
I do think this is a buying opportunity, but again, it depends upon your risk tolerance level and your time horizon. I mean, it's possible as we see multiples continue to contract that this market falls further. But at some point, we're going to see a stabilization and just a tremendous snapback. And if you look at how a lot of these stocks are priced in this market today, they certainly are as attractive as we've seen in 15 to 20 years, which has to be a good opportunity at some point in this market.
Fritz, what's the view from Boston?
Mark, you just used the word a volatile situation. A couple comments on volatility. First of all, volatility historically has spiked in and around periods of inflection, and that's where I think we are. So I agree with Mr. Perkins. Now, second and most important point on volatility, for stocks as an asset class, volatility is essential, as uncomfortable as that might sound. And the reason for that is volatility is what affords us the opportunity to earn the equity risk premium in stocks long term. The 5 percentage point differential we get in stocks over bonds in the long term. It's due to volatility. Don't let volatility shake you out of the market. Don't let volatility upset you. Let's ride this out and capture the extraordinary value that we see in the market today.
Art Cashin is with us, and Art, I want to get a sense from you of perspective here. We were halted, and now we're open, fully open. We're down 405. Is that a sign of a market that is perhaps more stable than you would have thought a couple hours ago?
Well, it's certainly not the amount of panic that was indicated in the foreign markets. This is like any other opening in the last 3 weeks.
Exactly.
You know, we've been down 400, 300, whatever.
Yep.
They are attempting to rally a little bit too early. I really would like to see a little bit more of a washout. We'll see how they progress as the futures move along. They took care of the first shock. And if we get a second wave of selling, we'll be there. You know, I've been writing for 4 weeks about that 1,000 point, maybe 2,000 point bottom. Monday's the best day of the year, last Monday in October, to put in a bottom.
And what is a bottom now? I mean, is that below the 7882.50 that we saw? I mean, how low is
it is
the
wherever
bottom?
the market stops selling, okay? That could be 7,400.
I was hoping for more clarity.
It could be 7,400, could be 7,000. But I'll tell you this.
Yes.
When they turn, the rally will be jaw-dropping. They will talk about this for generations to come.
We talked about a 1,000 point up move, Art. We had a 1,000-point up day, and it's all gone.
That was then. This is now. Okay? You got to live in real time. History is good for teaching.